Welcome to Illuminati Silver. We tell the truth about silver. Today is Thursday, the 19th of August, 2021. And we're producing our gold and silver morning update and price forecast. Yesterday, as advised, the FOMC published its recent minutes. And frankly, they are a bit of a game changer, at least short term. And for those of us holding precious metals, unfortunately, not to our benefit, unless you wish to buy. So let's take a look. Welcome to Illuminati Silver. It's Thursday, 19th of August 2021, 09:15 a.m. GMT +1. Cloudy, but warm. That's the weather today, and that's how I feel this morning. Why? Well, on Monday, I moved 50% of my pension fund out of equities into cash. What happened Tuesday and Wednesday? Equities fell. Is this the start of the crash? I don't think so, but I certainly believe its upside is limited. So I'm feeling warm about that decision, but cloudy because any investments that go down, really, it's a sad day. Is it a sad day in the news? Well, let's take a look. COVID vaccines are less effective against Delta. Large UK study finds. Not good news. And this might be why Biden is now talking about encouraging people to have a booster vaccine later in the year. Says troops will stay until Americans leave. Well, he shouldn't have really had to say that, because he should have made sure that was the case in the first place. Stocks, oil sink on growth worries. Dollar gains, we'll have a look at that. And also, this is quite interesting, Brexit boosted one UK export. Millionaire British bankers. We'll have a look at that because it's quite interesting. Simply because I suspect those in favour of Brexit, and I being one, we didn't expect Frankfurt to take over financial services. We had hoped that our government was sufficiently entrepreneurial to turn London in particular, because that's our financial hub, into a serious investment centre. Looks like they're not going to achieve that. High-earning financiers have been abandoning London and moving to Frankfurt, Paris and Milan. That's worrisome for the UK financial capital. One of the biggest economic fears around Brexit was that it would curtail UK exports to its main trading partner. Indeed, British sales of dairy products such as milk and cheese to the continent plunged by more than 90% in the first quarter from a year earlier, as the increased costs and complexity of doing cross-border business started to bite. But there's one valuable commodity where Britain's decision to leave the trading bloc has boosted UK exports, those of high-earning bankers. This is one outflow that the country can ill afford, given the nation's dependence on the finance industry for almost 7% of total economic output. Figures just released by the European Banking Authority show that the number of UK bankers earning €1 million or more a year shrank in 2019, as the nation prepared to exit the EU after the 2016 referendum on Brexit. Correspondingly, the populations of well-paid financiers in Italy, Germany and France all increased. I spent a serious number of years in the company of such bankers earning in excess of $1 million or euros or pounds a year. And do you want the truth? I found them competent, capable, but very, very few warranted those sorts of salaries. I say no more, in case one thinks it's envy. BBC, Biden says no American will be left behind in Kabul. We've more or less covered that. Business-wise, FTSE bosses earn 86 times more than the average wage. The bosses of Britain's biggest public companies earn 86 times the average full-time wage last year. Some of them will deserve it. Most of them won't. UK defence firm deal unlikely to be rejected. 40, and this is quite important as we move into the technological age, 40 million T-Mobile customers hit by data breach. And this is going to become an ever-increasing form of exposure and vulnerability. So be careful to whom you give your data to. US, Canada, it's really more repetition of that. Let's have a look at the finances because we've got some important stuff to cover on silver and gold. Dollar index is up 0.29, 93.42. We've said all along 93 will be breached. It's been breached quite strongly in the last 24 hours. It's 93.42, and do you know, I hope it doesn't happen because I can see ramifications for this, but it could touch 94. Oil price is obviously down, hit by the strengthening dollar and other issues too. $2 down for WTI crude at 63.42 and $1.79 for Brent crude at 66.44. Good news for those of us, in theory at least, buying oil. Stocks, right, took a hit. 1% on Wall Street yesterday, broadly amongst most of the exchanges. Overnight, 1% to 2% in Asia Pacific. And now in the UK, roughly 2% down. Yesterday, we had some interesting figures from the building permits. Permits were up, 1.61 million, but housing starts were down, 1.59. It's this we're going to focus on briefly today, the FOMC minutes, because this is the game changer. Coupled with this today as well, we have the jobs report, or rather the unemployment or jobless claims report, which is due out later. And we also have the Philadelphia Fed Manufacturing Index and the index of leading economic indicators. But the jobs report is going to be the most important because it backs up what was said in the FOMC minutes. And when the next non-farm payrolls come out, shows increasing people being employed, that may not be good for gold and silver prices. And we can see already over the last 24 hours, gold is down $7.92 at $17.79. See this dip? Just after the Fed FOMC minutes came out. Let's have a look at silver. Silver down 49 cents at 23.25. And again, you can see that dip, it's recovering a little. Now, what happened? Yesterday, the FOMC minutes were published. And what they showed is that the majority of governors were in favour of tapering their bond buying programme. What was slightly in dispute was the timing. Now, as we know, and we've covered this many times, the Federal Reserve does not wish to upset equity markets, but its main function is to encourage further economic growth and cut unemployment, hopefully to the point of what economists regard as full employment. The fact that they're considering now, and may very well discuss in September, at their meeting at the end of September, they may then talk about introducing tapering. Now, this is not set in stone because some of these governors disagree as to the timing. But nevertheless, it is on the agenda, and what's going to happen now, for sure, is that they will be looking at the next non-farm payrolls in particular, but also the unemployment claims on a weekly basis, but the next non-farm payrolls report that comes out in September. This is a major headwind for gold and silver from a monetary metal point of view, because it's foreshadowing less stimulus into the economy and foreshadowing the earlier introduction of interest rate rises. Now, the Fed has been at pains to say, well, just because we taper doesn't mean we're going to bring forward interest rate increases. But it's the start of what happened after the last financial crisis. Now, we shall see what occurs, but short term, the markets are going to take it negatively because they think now their, shall we say, holidays are over. And we've seen this, A, in the equity markets falling, and secondly, gold and silver prices going down because the dollar is strengthening. Because in Europe, they're still talking about increasing potentially QE, or if not increasing it, looking at ways of maintaining it at its current level. Now, they're not quite doing that in the UK, and the Fed is hinting that it's not quite going to do that either, and that they're going to become more hawkish. And that's what this is all about. Why we say short term? Because although we do believe that they will cut back, we don't think it's going to be for a little while yet, and therefore markets will perhaps swallow this and continue slightly higher, providing they don't go through a major dip now out of panic. Do I think there's a crash happening tomorrow? Not necessarily, no. But there could be further declines over time. That's not good for gold and silver. However, as the economy picks up, the industrial demand for silver will rise. And so silver will eventually benefit from that. But short term, they're both taking a hit. Also taking a hit have been cryptocurrencies. The last 24 hours, they're down again, albeit only 0.85%. And we now have a market cap of 1.9 trillion. I'm still of the view that providing there is no equity collapse, the cryptocurrency market's market cap is going back over 2 trillion. And certainly by the end of September, and we believe by the end of August. Let's see if that happens. So, more pressure, downward pressure on gold and silver, for sure, but we don't think it's a rout. That's it for now. Sorry to deliver that news, we wish it was better. For those looking to buy, it is probably good news. Those hoping to have sold, perhaps not so. Have a great day, everyone. Please give us a thumbs up, subscribe, press the bell sign. Until our next video. Illuminati silver owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.